Hello dear students, welcome to Devika's Commerce and Management Academy. Production budget we are going to discuss. In the previous classes we have seen lot of budgets like flexible budget, cash budget, sales budget, all these things we have seen. Now how do we prepare this production budget? It is very important. You know that production, how much production we wanted to produce. This is very much important. This production is always depending on the sales. So when we want to prepare production budget, we need to know the sales budget also. Why sales budget is related to this production budget? Production, how do we produce it? Based on the sales. If sales are good, more, then our production should be equal, or it has to meet the sales. In that way we have to produce it. That is why always it is interlinked with the sales budget. Production budget, when we want to prepare, we need to know two things. What is to be produced, when is to be produced. What is to be produced? Generally products related to the company. What kind of products they are having, and how they are maintaining, and when it has to be produced. And for all these things, what is required is planning, master planning and implementation. And there should not be any stoppage of production. Production should go on. It has to meet the expectations of the sales. Whenever customer says we want so and so products, the production is ready, it has to produce it, it has to deliver the products on time. So that is why production department, production is very much important. So how do we prepare this production budget? Simple formula, you remember. What we take is here, simple sales will take. To sales we'll add closing stock and deduct the opening stock. That's all. We'll get the production, how much production we are expecting, how much production has to be produced, that will come. Now what is the formula? Simple formula. Remember it like this. Suppose a production budget we are preparing for different products, product A, product B, product C. Sometimes for 1 year, 2 years, like this it might be given, and some quarters, or it can be anything, but pro forma I am talking. So when it comes to the pro forma, first we will take always sales, estimated sales, or you can say sales. How much sales we have? To the sales, what do? We will add the closing stock, add closing stock. When we add closing stock, some amount we are going to get, minus opening stock. Now whatever answer we are going to get, that will be the production. Estimating production or requirement of production, the answer will be simple. What we have taken, estimated sales, means given sales, to that we are adding closing stock and minus opening stock, that's all. This is the pro forma. Now through a problem you will have more understanding. Now we will see the problem. This is the problem. Prepare production budget. Simple problem I have taken to make you understand. Next class we will see a little bit complicated problem, right? Now prepare production budget. What is given? Product A, B, C. Sales in units 1,50,000, 1,00,000 and 70,000. Sales for each product is this much. Estimated stock 1/1/2020 and 28/2/2020. It means this is opening stock, this is closing stock. Sales, opening stock, closing stock, 3 are given. What to do? Just simply put it in the formula. Now for that we have drawn this format table. Production budget, we kept a heading. Here are particulars. Product A, product B, product C. Separately they have given. No? So 3 products, we will show it 3 products like this. Now what we will do first? We will take the sales. Estimated sales, or you can say it as a sales. Sales are how much? 1,50,000. Then 1,00,000. Next 70,000. To this we have to add the closing stock. Where is the closing stock? It is here. Closing stock. Add closing stock. Closing stock. Closing stock is here. 15,000. Okay, next 4,500, then 8,000. If we add, you'll get here 78,000. This is 1,04,500 and this is 1,65,000. From this we are going to deduct opening stock. Where is opening stock? It's here. Okay, opening stock is 14,000 first year, second year 5,000, third year 8,000. If we deduct it, we'll get production, required production. So if we deduct 1 and here 5, 1,51,000 here, and this is 4 minus 5 means 9, this is 99,500 and here 70,000. That's all. Required production is this much. First take a screenshot or make a note down. I'll give you recap. You know that production budget is, format is simple. Whatever information is given, we have to produce it, we have to present it in a proper way. By preparing this production budget, what the company is going to get, what is the information they are going to get, how they are going to use it. If you see what we have done, sales, added closing stock minus opening stock. So required production is this much. It means, it shows that for product A, we need a production of 1,51,000 units to be produced. For B, 99,500 units we have to produce. And product C, 70,000 units you have to produce. So this is showing that this much of production we have to focus, we have to produce, right? That is why production budget is required. Simple format, as I told you, sales, add closing stock minus opening stock. Here everything is given, we have just implemented, we have put it over there, that's it, we got the answer of production to be done. That's it, simple problem. Am I clear? In the coming classes we'll see more problems. And by the way, did you check the playlist? There are many subjects which already taught and covered with lot of time and energy. Please use it and don't forget to forward these videos. Practice well, have a bright career. Good luck.